Good afternoon and welcome to Business Buzz. Coming up, Nigerian stocks extend their slide as the market correction continues. A new report finds Nigeria spends far more servicing its debt than on its schools and hospitals. The ratings agency S&P Global raises its inflation forecast for Nigeria and trims the growth outlook. The Dangote refinery cuts its depot price for petrol as crude oil eases, and cooking gas runs short, with the country turning to imports. This and many more coming up. I am Louisa Asidi. Stay with us. We begin with the markets and a second day of selling on the Nigerian exchange. The all-share index closed down 0.64%. The decline wiped almost 1 trillion naira off the value of listed companies in a single session. This follows one of the strongest rallies in the market's history. The index is still up around 50% for the year. Analysts call it a correction, profit-taking after a long run, not a collapse. The sell-off has even affected the wealthiest Nigerians. According to the Bloomberg Billionaires Index, Aliko Dangote and Abdul Samad Rabiu have lost a combined $3.5 billion on paper in 17 days as cement shares come under pressure. On the currency market, the naira closed at around 1,380 to the dollar on the official window, while the parallel market held flat at about 1,400. To global commodities, where it has been a heavy week. Starting with oil, Brent crude is trading near $74 a barrel, down from above 82 only days ago. The trigger was the Strait of Hormuz, the narrow Gulf waterway that carries roughly a fifth of the world's oil. Fresh talks between Washington and Tehran eased fears of a supply shock. For Nigeria, cheaper oil cuts the government's dollar earnings, but can ease pressure at the fuel pump. Gold has come under pressure in recent sessions, holding near $4,000 an ounce. The driver is the United States Federal Reserve, now expected to raise interest rates rather than cut them. Higher American rates make the dollar more rewarding to hold than gold, which pays no interest. But the stronger dollar puts more strain on the naira. It makes every barrel of imported fuel and every dollar of Nigeria's debt more expensive to repay. One bright spot closer to home, cocoa, a commodity Nigeria exports. It's climbing, bucking the wider sell-off. Staying with the markets, and a shift playing out beneath the headline numbers. While new share listings have all but dried up, companies are raising money instead through commercial papers, short-term corporate debts repaid in a matter of months. Insurance has climbed sharply this year, and a growing number of smaller investors are buying in through mobile apps. To unpack what is driving the move from shares to short-term debt and what it signals for the market, I'm joined by Paul Chukwuemeka Onyewenhe, a capital market analyst from Afri Invest. Hello and welcome. Today we have Mr. Paul from Afri Invest joining us. He's going to take us through a short explainer on what short-term investments are available at the moment. Mr. Paul?
Good morning.
Welcome.
Yeah.
Okay, so let's go into a very basic explanation of what commercial papers even are.
Okay. Commercial paper are debt instruments issued to private organization.
Okay.
Private because it's cheaper to go into commercial paper than to go into borrowing from the banks. That is why most investors most issuing houses, companies go into commercial paper.
I see. But companies used to, if they couldn't borrow from the banks, they used to just go directly to the public with an initial public offering, an IPO.
Why are they choosing to go into short-term debt over equities?
Why they chose to use short-term debt is just a short-term working capital. All they need is short-term working capital. Like commercial papers, they don't exceed 1 year. It's within 1 year. So most of this company, they go into it because it's just a working capital they need within that short space of time.
So, but why is that affecting the IPO market? Why are people refusing to go into IPOs now? Why do companies want this instead?
When you want to go into IPO is like people investing, taking up your shares, being a shareholder in the company. It all depends, decision depends on the company, what they are looking at, what they want to go into, and how they want to go into it. Like commercial paper, like I said, is a short-term instrument, debt instrument, which they go and come out of bond. Like IPO is a long term. Investors are investing into the equity of the company. It's a long time, meaning they might not want such within that very space of time.
I see. Okay. But for the average investor that's looking at all of these issuance, like what should they know going into commercial papers? What are the risks? What are the benefits?
The benefit, like commercial paper, like they say, is a fixed income product where you already know what you get. Interests are paid upfront. If you invest, you want to collect your interest upfront, you get it all at maturity. You know what will be paid to you. So those are the reasons why people go into it.
Yeah.
Unlike when you go to the other one, equity. Equity is a high risk investment, whereby you don't know what the outcome will be, but it's one of the best way of savings. But commercial paper, you already know. You know the tenor, you know the amount you're going to take, you know when to go out, know when not to go out. You understand? It's also on commercial paper.
But these are unsecured instruments.
Yes, commercial paper are unsecured instrument. Like we say, it is for companies with high rating. They are unsecured because it doesn't have the full-fledged of the law backing, unlike treasury bills. Treasury bill is government. It has full-fledged of the law backing them, issued through CBN on behalf of the federal government of Nigeria to the public.
Okay. So there's a high risk element of this now because, as you've mentioned, these are unsecured instruments that are tied entirely to the issuer's credit. And as newer low-rated names enter, how should ordinary investors think about this risk?
The risk, like let me use example. Let me use commercial treasury bills to buttress my, treasury bill is issued through CBN on behalf of the government with no risk. Government cannot liquidate. Government cannot go under. But commercial paper, they are for private companies. Anything can happen. They might face liquidity problem, unable to pay when they should pay. T-bills, there's no way they cannot pay. I mean T-bill for government. So commercial paper, the company might be facing challenges of liquidity and they might not be able to pay. That is where the unsecured comes in.
Okay. So what risks should people understand before putting money into commercial papers?
Well, before putting money in commercial paper, they should understand what the commercial paper is all about. Like you want to, T-bills, very flexible, go in, go out. Commercial paper, it might not be that liquidate, unlike treasury bills. Treasury bill, you can liquidate at every point in time. Commercial paper is not like that. It might take a little bit time to liquidate, to exit. That's why what we tell people, know the investment you are going into and know what you actually want while you are going there. You don't have to put a fund that when you want to exit, you might not be able to exit as compared to treasury bills, which you can go in, you can go out at every. That's why it's flexible. Commercial paper is not that flexible like that, as people may think.
Yeah. But for most people who don't really know much about investment, where can they start? Should they be looking at the equities market or are they looking at fixed income like commercial papers and treasury bills?
We see fixed income, commercial paper. They are two different investments. And like me, I go out there, I want to maybe I want to make this thing, want to market the younger ones, the youth. I will market them, I will advise them to go into equity, that's buying of shares, because of the high risk that is there and because those youths can take risk. For people, retirees, I won't advise them to go into equity. You understand? Because I always want their money not to be eroded. Their money, they should be able to have their principal to them and earn whatever thing that is there. Because you don't have to play with their minds. You advise them to go into equity, which is of high risk. You understand? Because the price in the market, you can't predict. You might enter equity today and it crashes. What do you tell that old woman who's always depend on that money? In equity, your investment can go down, can come up if you are lucky. That's why equity investment is a long-term investment, where you will not say you want to buy stock today and you go out of it tomorrow. But for commercial paper, you invest, before you investment, you already know what you get and know where to exit. You know, you are investing for 91 days, 181 days, or 364 days, or 270 days. You already know. So you streamline your mind on what you are going to get as compared to equity. That's stock. Stock, you don't really know. So you might enter stock today at 10 naira and tomorrow is 8 naira. Not that it will not rise, not that it will not appreciate, not that if you remain in equity, you will not earn the things that you are meant to earn. What are the things you are meant to earn when you remain in equity? Capital appreciation, dividend payment, bonus issues, and rest. You understand? That's why I say, not that you will not earn, you will earn, but you must not be somebody who is looking at the returns immediately. Equity returns don't come immediately, but commercial paper returns, you already know.
Okay.
When you are going into, you know what you earn, you know how many days you are going to stay. And at maturity, you know whether you want to come back to the market or want to take your money out.
Perfect. So when we talk about, you've just explained, we have low risk investments like treasury bills, that's backed by the government. We have medium risk, which is commercial papers. We also have a tenor attached to those. And then we have the higher risk, longer term investment, which is the stock market.
Stock market, yes, equity, yes.
So looking at this new shift that companies are now choosing the medium risk option, they're now issuing commercial papers instead of going to the public for IPOs. Do you think this is a temporary shift, or is this like a long-term lasting change?
It's a temporary shift, like I explained earlier.
Okay.
Temporary shift in the sense that when stock market is going high, when stock market is appreciating, the fixed income market is, meant to be low. People don't go into it because they will just drift going into shares. But when equity market is getting lower, you see people going into commercial paper, going into treasury bills in order not to erode their principal. They want to stay where they can earn something until they decide on whatever diversification of investment they want to do.
Okay. So let's talk numbers. If we're talking about treasury bills, what kind of interest rates are people looking at, and what is the tenor, that's the average that you see?
You see, in treasury bill in the commercial paper is the opposite of treasury bills. The only difference there is treasury bill is for government. Commercial paper is for private companies, entities.
Yeah.
They are just the same. Get interest upfront. Treasury bills, you collect your interest upfront or at maturity.
What is the interest number usually? Like, what is it usually about? Is it like 8%? Is it 10%?
The interest, the commercial paper, you have two
treasury
bills. Treasury bill, you have two options. You have this primary market and you have the secondary market. Primary market is where the options take place, because they are discounted instruments. Options take place in primary market, and if you're unable to play in the primary market when the option is taken, the other place you can have it is the secondary market. And that's to do with tenor, and it's been determined by the outcome of the option.
Okay.
for 91 days, 181 days, and 364 days.
Okay.
And those are, after the auction, those are the investment, the tenors or the deals that comes into the secondary market for people who are unable to invest, can always invest in.
Okay. Thank you very much. So just before we wrap up, is there anything else you'd like viewers to know about commercial papers? You can maybe let us know about the average interest rate. They have really good interest rates.
The average interest rate, like I said earlier, the attracting thing on commercial paper is the rate, but it's unsecured. And that is the thing the people want to go into, people that like taking risk, with high risk, to go there. But one of the good things about treasury bill is the safest of all investments. You go in there, you can go to sleep. But commercial paper, you can't go in there and go to sleep. You understand me? Because it's company. Company can liquidate tomorrow. Company can have issues tomorrow. They might not be able to pay as they have promised. So those are the things. For commercial paper, it's good. But one thing about it, before you can come up or come out for commercial paper, your books must be scrutinized, well scrutinized. They have good fundamentals that people can, okay, let me study how you've been faring over time. You understand the fundamental that is making you to do that. Check your books.
Okay.
So like T-bills, you don't have problem. It's government.
Okay.
CBN for the government.
Perfect. Thank you so much for joining us today.
Thank you very much.
It's been lovely having you. Look forward to having you next time. This has been very illuminating.
Anytime you want me, I'll be readily available.
Thank you very much. So back to you, Louisa.
We will be back in a moment with more business buzz. Welcome back. Now to the heart of the program and a new report on how Nigeria spends its money. The report by the campaign group Action Aid finds that Nigeria spends about 20% of its revenue servicing external debt, while just over 4% goes to healthcare and around 4.4% to education. The report also examines the advice the International Monetary Fund gives the government. It says the IMF pushed Nigeria to remove the fuel subsidy and recommended doubling value-added tax, the tax on most goods and services, from 7.5% towards 15% by this year, without enough protection for poorer households. Action Aid studied 8 African countries. In 2025, 7 of the 8 spent more on servicing debt than on health. Only Ghana and Zimbabwe spent more on education than on debt. The report concludes that for more lower-income countries, debt is now the single biggest obstacle to better public services. The IMF's position is that cutting costly subsidies and raising more non-oil tax is needed to stabilize the economy and free up money over time. The Nigerian government has not responded to this report, but has promised to grow tax revenue and protect more funding for health and education in coming budgets. The impact of inflation on Nigerians has just been underlined by a fresh forecast. The ratings agency S&P Global has raised its inflation forecast for Nigeria this year to 16.9%, up from 15%. It points to higher oil prices feeding through into domestic energy costs and warns food inflation could climb further on transport and fertilizer costs. The agency has also cut its growth forecast to 3.7%, warning in effect that rising prices eat into the household spending that drives much of the economy. The pressure on prices is being felt at the gas point. Cooking gas prices have been climbing and supply has been scarce. The regulator, the Nigerian Midstream and Downstream Petroleum Regulatory Authority says it is now importing more from abroad to ease the shortage. We have been speaking to Nigerians about how the squeeze is reaching their kitchens. Here's Zeno with more.
Let's talk about the gas crisis. In a matter of months, the price of gas has risen by 140% nationwide. Gas that sold for under 8,000 naira a kilogram now goes for 2,000, and as high as 2,400 in some neighborhoods. The government has called an emergency meeting. The regulator is pointing at exports, at profiteering marketers, and at middlemen padding the chain. So how does a country sitting on the largest gas reserves in Africa end up with families going back to firewood and charcoal? Today, we'll talk about what's really driving the crisis, who's paying the price, and whether anything the government is doing will bring relief.
Before I cook with gas, but now I want gas to charcoal. Why? Because the increase of gas is much. I cannot afford more to buy the gas again.
It was around 13, 14, 15. Then it went up to 2,000 naira per kg. That very day I went to fill the gas. I was expecting something like that 1.5 I normally fill before, but getting there, it was 2,000 naira. Then I was supposed to fill like 5 kg. Then I had to reduce to like 3 kg. I use electric air fryer just to economize my gas. Now sometimes I have to, if I want to cook something like beans, I have to wait for NEPA.
It's better you use gas instead of the charcoal because of your health. Yeah. Despite the increment in gas, what I do is that if I want to make stew, I go to my gas, I prepare the stew. If I want to cook rice, I go to firewood because I have it at home. All the simple food, I always go for gas. Why the hard one? I always go for firewood. So that is how I manage, because this Nigeria is very, very hard.
Nigeria is actually a gas powerhouse. We hold the largest proven natural gas reserves in Africa. But the real question isn't what's in the ground. It's how much cooking gas actually reaches the domestic market each day.
Some even come here with 12.5 kg and they feel 1 kg. That's how bad it is. Some come here to say, please, I need a 1,000 naira gas, which is not even up to 1 kg. So it's really bad in a way, actually affects our sales. Secondly, the product is not readily available. There is a little scarcity. That's the reason why there is an increment in the gas price. The depot price is way cheaper than what we're actually selling here. When nothing goes up and come down so easily. So, like I told you, it's an artificial increment. Probably if it's definitely get to a benchmark where they want it to get to, they might want to bring it back to 1.8, 1.7, so that me and you will feel like they've actually decreased it, but it was not as it used to be.
We have 4 refineries that we have spent a lot of money on. Unfortunately, they are not running. So that's where the problem is. If you make all these refineries to function well and you add Dangote to it, and all these modular refineries, instead of just shutting them out, you legalize them, we will have no reason why we should buy gas at these exorbitant prices that we are buying them now.
Regulators say Nigeria produced between 5,600 and 6,400 tons of cooking gas daily in the first 5 months of 2026. But in April, the amount that actually reached the local market fell to around 3,600 tons, a shortfall of more than 2,500 tons in a single day. Government data shows major producers like Chevron exported every single kilogram of cooking gas it produced in the first 5 months of this year, more than 148,000 tons. Not 1 ton of that Nigerian gas reached a Nigerian kitchen. That's the core contradiction. A country rich in gas is selling to the world, but is unable to guarantee affordable cooking gas for its own people.
We do not have enough in the country, and you are selling the few that we have because of the exchange in currency. First of all, make the value of our currency increase so that there will be no need for people to start exporting our products to the other countries. Ensure that these things are produced en masse. It is only when it's adequate enough for the local people that you can now decide to say, okay, let me export.
Cooking with charcoal is harmful
It affects our eyes. It affects our breathing. It affects our, in short, our health. It affects us. But if you cook with gas, you are safe. All your body will be clean as. But why cooking with charcoal? Very dirty. So I am appealing to the government to let us know what to do to bring down the cost of gas.
This is more than a temporary shortage. It's a stress test of Nigeria's gas-powered economy dream. From how producers decide who gets supplied first, to whether ordinary people can trust that policy will put them ahead of the next export cargo. I'm Zino Iroro. Thanks for watching Naira and You.
The Dangote refinery has cut the price at which it sells petrol from its depot down by 50 naira to 1,125 naira a litre. The refinery linked the move to easing tensions in the Middle East and the fall in global crude prices this week. That is the depot price, not the pump price. So the figure to watch is whether the cut reaches filling stations in the days ahead. It's time now for a break. We'll be back in a moment. To the international brief, Apple has raised prices across its Mac and iPad ranges by between 15 and 25%. The company blames an unprecedented surge in the cost of memory and storage chips, driven by demand from artificial intelligence data centers. For Nigerian buyers, where Apple products are already priced well above their dollar value by the time import duties and the exchange rates are added, any other further increase from the manufacturer hits harder. Turning now to two signs of Nigeria reshaping how it trades. First, the Philippines says trade with Nigeria has grown 700% in 3 years, from $47 million to $300 million. Its ambassador announced plans for a Nigerian-Philippines Business Council. The volumes remain modest, but the direction signals a quiet pivot towards newer partners in Asia. Secondly, closer to the continent, the federal government is proposing an African payment card, an ordinary bank card that would let a trader, a student, or a tourist pay in another African country while their account at home is debited in Naira. This means there will be no dollar or euro sitting in the middle. Today, many payments between African countries still route through foreign banks and foreign currencies, adding fees and delays. Officials said the more African trade that settles in African currencies, the less Nigeria must lean on scarce dollars to do business with its neighbors. For now, it remains a proposal, one that needs banks, fintechs, and regulators across the continent to sign on. And finally, to Delta State. Zenith Bank has opened a new branch in Osubi in Okwe local government area. The bank says it is the first commercial lender in the community, and it's the 19th branch in the state. It was commissioned by the Delta State Governor, Sheriff Oberewori, who donated the land. For a largely unbanked local economy, The measure will be whether one branch meaningfully widens access to finance. And that is it for Business Buzz today. Thank you for joining us. I am Louisa Asidi.